One of the stocks I've been asked about a few times on asymmetric investing, definitely has the market's attention right now, is SoundHound. So I wanted to dig into exactly what this company is, if this is an opportunity for investors or if this is just a lot of hype, because there's a lot of activity going on with SoundHound stock, but that doesn't necessarily match up with the fundamentals. So I want to go through exactly what we know about SoundHound today, maybe what investors are interested in, and my questions about the company. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with what SoundHound is. Now I'm going to start with SoundHound's website. This is the way that I would normally research a stock. Just start learning about what in the world the company does. So this is a voice AI company. Leverage SoundHound's fully independent voice AI platform to give your business a unique edge. So you can see some questions here. This is a restaurant that they're showing, and that seems like that's where they do have some reasonable momentum, is in the restaurant business. They also have some automotive partnerships. But if you go to their site, this demo that they're showing right here is just somebody calling in and making an order, and then that order going into a point of sale system. What got the market's attention over the past week or so was this announcement right here. And this is where my ears start kind of perking up about what in the world is going on with SoundHound when you announce a partnership with Torchy's Tacos. Now, I've never been to a Torchy's Taco. There are apparently 130 locations. I pulled up the map here. This is in the US, so they're in the Denver area. Looks like Kansas City, the Dallas area. Not a huge restaurant chain. So what is SoundHound going to be doing for Torchy's? The voice AI ordering capability manages 100% of incoming calls, including handling multiple calls and orders simultaneously. This is, again, just like the demo that they showed. What SoundHound is going to do is basically take all of your incoming calls and do everything that a human would normally do, but just with an AI. Now, what I think is interesting about this is more and more ordering for food is going online, going digital. So how many people are actually calling into a restaurant to make orders? That's where I start to wonder what the real potential is for the company. So let's look at the financials, see what we can learn from that. Now, as I go through this, remember that SoundHound has a $5.5 billion market cap, billion with a B. Over the past year, they have generated $67.3 million worth of revenue and $110 million worth of losses. The other thing that I always want to look at is free cash flow, that is in the light blue color, and the cash that's actually on the balance sheet. So SoundHound has basically a year's worth of cash at the current cash burn level, but the company is burning a significant amount of cash. Now, the other thing is the revenue growth isn't organic. At least a lot of it isn't organic. If you go back to that first chart, that showed since 2019 a 58% compound annual growth rate. But SoundHound has been making acquisitions. Acquired Sync3 about a year ago. And this is actually what brought the company into the restaurant business in a big way. So that's going to be part of the company's growth driver over the past year. They paid $25 million for the company, and most of that was paid in stock. More recently, in August, SoundHound acquired Amelia. This was for $80 million, and combined, the companies are expected to generate about $150 million in revenue in 2025, with Amelia bringing in almost a third of that at $45 million. They also brought some debt with them. So that cash number that I talked about earlier, the net cash is expected to only be about $120 million right now. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So you can see this story building. SoundHound is an AI company. AI is obviously very popular. This is an application layer company. So that's where investors are focusing right now. A lot of the infrastructure companies benefited in 2022, 2023. Now we're looking at, okay, what's that application layer going to look like? How are people actually going to be using artificial intelligence? This is a potential use case for that. What I have to question, though, is there some sort of differentiation that SoundHound is bringing to the market? If you just do a simple Google search on who is doing voice AI, you have everybody from OpenAI to Alphabet to Google to a whole bunch of startups who are doing basically exactly what SoundHound is doing here. And the partnerships that they're touting right now are not exactly the highest end partnerships. They're relatively small restaurants. Doesn't seem like they're making a ton of revenue from each of those deals. So it isn't like these are tens of millions of dollars deals when you're signing a deal with something like Chipotle or McDonald's. So those just have some red flags that are going off in my head. And then you add that to the fact that a lot of revenue growth is coming from acquisitions. That is a red flag. This is a company that should be growing organically. Also, why are those startups, those relatively small companies, selling out to a company like SoundHound? Do they not have a sustainable business model themselves? Is SoundHound just aggregating a whole bunch of unsustainable businesses in audio artificial intelligence? So I don't see any real moat there. I don't see evidence of a moat, and I don't see evidence of a positive cash flow business or a positive margin or operating margin business. Here's the other thing that really caught my eye. These are all of the stock sales. This is from FinChat. These are all the stock sales going back to July 2024. I can scroll down here a bit, but you can see that in early December, the co-founder sold 13% of his shares. Another co-founder sold 25% of his shares. Another co-founder, 8%. Another co-founder, 2%. So they're all selling stock right now. Why are they selling stock if everything is going well for SoundHound? And in particular, why are they selling stock at such large numbers? That's something that you should keep in mind as an investor. If insiders are selling, that tells you something about what they think about the business. So even just this high level look at SoundHound shows that this is a company that doesn't really have durable financials. Their partnerships that they're generating, the growth that they're generating is at least a little bit suspect, because a lot of that is coming from acquisitions. It's coming from deals with relatively small restaurants that probably aren't doing a whole lot of work to see exactly what the best models are out there for them. They're doing a value-added service that I have to question how much value there is in ordering over the phone in 2024. That's just kind of a strange thing to be touting. And then you have all of these insider sales. So you add all this together, and I don't see any sort of competitive advantage. I don't see any moat. I don't see anything that SoundHound is doing that a dozen other companies aren't doing. Even if you just look at in the past week, when Spotify launched their Spotify Wrapped, they did a custom podcast for every single person in their Spotify Wrapped. That podcast was done by Google. So those are the kind of capabilities that the biggest companies in artificial intelligence are putting to work. SoundHound may be able to build some sort of a small niche business in the restaurant business, but I have to wonder, why wouldn't a company like Toast just customize its own artificial intelligence model with some of the bigger model makers? That's something that they could do relatively easy and just incorporate it into their point of sale system instead of having a side company like SoundHound involved. So all this just doesn't add up to me. And you look at the valuation, and that's where things get absolutely crazy. Right now, SoundHound is trading for 80 times sales. Remember, this is not a company that's profitable, so there's no positive price to earnings multiple, but it's trading for 80 times sales. That's indicating that investors are expecting tons of growth. But remember, there's not a lot of organic growth from SoundHound. So my red flags are up all over the place with this stock. Absolutely not one that I'm buying. It's actually on a list that I have for potential short sales through long dated puts that I may consider doing in the future. So that's where my head is at with SoundCloud. Not a stock that I would touch right now. Definitely one that I think has run way too far, too fast. Wouldn't be surprised if management actually takes advantage of that higher stock price by selling some stock to raise capital for the future, give themselves a little longer runway. That would actually make a lot of sense, but probably wouldn't be helpful to the valuation for shares short term. But let me know what you think about SoundHound. Do you agree or disagree? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.